Carnival Corporation shares. You're seeing them move higher by about 2%. The company releasing their Q3 earnings this morning, and analysts saying that they're riding high tide. Robust demand and elevated onboard spelling good news for the cruise company. Yahoo Finance's very own Brian Sozzi is interviewing Josh Weinstein, who is the Carnival Corporation CEO and president today. You can catch that at 3 o'clock here. But even as we continue to evaluate what the broader sentiment is for some of the cruise line operators, they have been some of the outperformers over the course of this year. And a larger question of whether or not these re-engagement campaigns, where you had customers that were going to set sail last year, maybe the year prior, when they were looking for more guidance from the CDC, looking for the all clear that you would see full capacity on these cruise line operators and not just a kind of gated capacity plus restrictions on top of that. I think for the cruise line operators, they've done a good job of attempting to make sure that in those re-engagement campaigns, not only do you have a customer that has been pent up waiting to get into these experiences, not me, not going on a cruise, but not only just waiting to get onto the cruise, but also looking to spend more while they are in that experience too, and that's paid off.
Yeah, and that's critical here for the cruise lines going forward. You mentioned their outperformance this year. They're among the best performers in the S&P since the start of the year. When you take a look at the performance of Carnival, when you take a look at the performance of one of their rivals, Royal Caribbean, Carnival's up more than 80% since the start of the year. Royal Caribbean up more than 90%. So we certainly have seen a massive bounce back in these stocks since the start of the year. But digging a little bit deeper into this report, getting a beat on both the top and bottom lines here for the company. Revenue up nearly 60%, 59% on a year-over-year basis. Adjusted EPS coming in at 86 cents a share. Passenger cruise days at 25.8 million. That's up 46% from just about a year ago. And some of the commentary here from Weinstein, who we'll hear from later on this afternoon on Yahoo Finance. But Weinstein saying that the outperformance was driven by strength and demand, with both our North America and Australia segment as well as the Europe segment equally outperforming expectations. He also went on to say that with less remaining inventory to sell, despite a 5% increase in capacity, we are well positioned to drive pricing higher and also deliver strong yield improvement in 2024. And we're seeing that reflected in the price move here at the open, with the stock up just another 4% here, right above $15 a share. But going back, Brad, to the point that you were making here, it all comes down to the consumer, their willingness to spend not only on buying the trips and getting on board of these cruise ships, but also the spending and what we're seeing exactly play out once they're on the ship.
I think it also says that at least at this point in time, too, you're looking at a Carnival that's in a much better position to perhaps pull back on some of the marketing spend in re-engagement campaigns, or just trying to attract net new customers as well as things start to normalize, or at least eliminate some of the chop on the high seas, if you will.